Redirecting. Okay, I might be live. I don't know. I might not be. I haven't gone live on my timeline for ages, so I apologize in advance because things have happened, things have changed, all sorts of differences. So I thought I would just do a quick look at the pound Australian dollar because we've got this Forex trading workshop coming up next week, and I thought I'd give you a quick sort of snapshot preview, as it were, of the kind of thing that you might be able to expect. So I'm just going to share my screen and see if we can talk you through some of the bits I've been doing recently. So hopefully right about now, the funk so brother, you could see my screen, pound Australian dollar, and a load of lines and a load of weirdness. So at the moment I'm just on the 5-minute time frame, and I just want to share some bits and pieces that I've been doing that might help you, it might not. So I'm on the 5-minute time frame. As I've said already, I've got just a plain price chart on ordinary candles. I've got some zones marked off, and I've got this fantastic indicator at the bottom here, which is available to members of our trading community. It's the multi-time frame stochastic. I use it all the time because it's brilliant. But what I wanted to show you was how price moves and bits and pieces. It's really, really interesting. Well, to me it is. I have a bit of a passion for it, but you know, you might not find it interesting. So I'm going to show you what I've got going on here. So actually, first of all, I'm going to jump to the 4-hour time frame, and this might look really weird, and it is really weird because I've got these dashed lines marked out at various intervals, and these lines are all 35 pips apart. And I've sort of discovered that over time, the levels of support and resistance on this particular currency pair, the pound Australian dollar, I find these lines really handy. So what I've got is these dashed lines. It doesn't always match up exactly, but it gives me a good idea, gives me a rough guide. Because if you were to actually draw the lines of support and resistance wholly accurately, they probably wouldn't come out at 35 pip distances. But I've just happened to found that over time, the reason I sort of discovered it was I noticed that, oh, they seem to be quite equidistant. One was maybe 34 pips, one was 36 pips, one was 37 pips. And I just found that actually, if I just make them all around 35 pips, having that gap in between, it gives me a good idea of what's going on. So I've also got these other weird lines going on all over the place. I've got a trend line here. I've got a long-term trend line there. I've got a trend line coming down that way. I've got a trend line going up that way. It looks like, oh, I don't know. Some people refer to it as a spider's web. Some people go, how on earth can you tell what's going on there? But this is, don't forget, this is the 4-hour time frame. So what I tend to do is I look at the 4-hour time frame and I compare this. I've said it many times before. Compare it to looking at Google Earth. So if you want to find the trampoline in your back garden, looking at the whole of the globe, you're not going to be able to find it straight away. So you've got the whole of the globe on Google Earth, and you start zooming in, and you zoom in, and you zoom in, you zoom in, until you get to a point where you can see the trampoline in your back garden, where you're pinning down to a really quite accurate point. So this is just giving me an overall guide and look at what's going on here. So we've got this trend line coming up here from, there's a touch there, there's a touch there. It starts further back there where there's another touch, and you can see it's come up this way. Price has broken that trend line there, had a right good run down here, It's pushed back up there. We had some decent pips coming from these moves up this way. In fact, on this move here, I seem to remember saying to the trading community, it looks like price is touching this or about to touch this trend line again. Is it going to break or bounce? And it bounced, and that went for, I think it was 100 odd pips, that move there from testing the trend line again. At this point here, it's actually broken the trend line, started coming down. But in a way, that's kind of what we wanted, because we've drawn out this zone here. And as you can see, that the price has come down into that zone and then gone on an upward journey. Excuse me. So we've got this trend line coming down this way, where we've had a touch, obviously right at the top, one there. It did sort of touch there, wicked through, and then came down, then pushed right through, and then has come back down this other side. And you can see it on its journey this way down. It sort of kept testing that trend line on the way down. Then it had that big drop, pushed up, broke, retested. It actually came back down the other side of it, but then broke again. And you can see it's retested there and then gone on another journey. So we've now got this trend line heading up this way. So overall, do we think that price should be heading upwards? Not necessarily, because this is a 4-hour time frame. So you know, we could see price coming down, possibly testing this trend line again. But anyway, that's just an overall picture, because I'm going to go back to the 5-minute time frame to show you how I trade on the 5-minute time frame. And I think I've said 5-minute time frame a few times there. So here we've had a strong push up yesterday, and one of those trend lines coming across the top there. Price has pushed up and tapped it. So what I've done is I've drawn a zone from the top of that wick of that candle there, which is the highest point. So not the green candles, the red one just to the right of it. So at some point, price had pushed up, created that new high there. I've then drawn these fib zones on. So I've taken it from the top there to the bottom of the wick of this candle here. And then that's created this zone. You could get in once it enters that zone there for a sell. It's come down and obviously gone back up and tested it again, and then gone its move there. And that was, what time was that? It was around 5 p.m. yesterday. And that gave us a drop of, I think it was around 30 pips, if I remember rightly. Let's have a look. Just to that first point there. Yeah, so 30 odd pips, just over. But obviously it carried on going down. But you could set that as an initial target, and you've got 30 pips there from the 5-minute time frame. Again, we've not got any other indicators on here at the moment. This is just ordinary candles, no other indicators, just setting these particular zones. So then I've gone to the 15-minute time frame, and I've picked out, using one of the indicators that I'll show you in a minute, that this lower low here. And I've created, again, using that same high point at the top there, a new fib area or zone, using this point here, and price has pushed up to that area there. So if you wanted to, depends on your level of confidence, your level of knowledge, your level of ability, you could be trading that move up that way. And again, if you're looking at the stochastic down here, sorry, it's a bit annoying because as I move over it, we get the controls there. So I'm just going to go up here a bit. You can see where I've got this vertical line, where I've got my cross placed here. We've got this blue band here, which means that we've got the 5-minute and the 15-minute, and actually at that point there, we've got the 30-minute time frames down in the extreme there as well. Now, I had a question this morning on one of the live sessions about the stochastics being a lagging indicator, and actually it is a lagging indicator, but it still gives you a good indication of what's going on. Now, obviously, at this point of the day, for me, it's 3:40 in the morning, or maybe even 3:35, if I'm being spot on there, where we got that move there. So I would have been fast asleep and wouldn't necessarily have been setting these fibs at that time of day. But when I got up this morning, I could see that prices was pushing up. Set those fibs in place, saw that it was actually setting up at this area here, and then was looking for a sell opportunity, because obviously it's hitting that zone. Not only that, but if again we look at where the stochastics are, we've got the 5 and the 15 minute up in the extreme there. Only those 2 time frames, yes, but not a problem, because I'm normally, the way I trade, I'm normally only really looking for the 5 and 15 minute to be in the extreme at the same time. So when I talk about in the extreme, I'm talking about it being above this red line here upwards, and we've got this red band behind it saying we're looking for a sell. And when it's down at the bottom here, we've got the 5 and 15 down at the bottom here with the blue band behind it, looking for a buy. So on this move down here, so we're looking for a sell from this point here down to this grey line here, which I've drawn from this previous low back here. And okay, it's not the lowest low, but at the time on the 15 minute, that's where I'd marked out as the low point. And that gave us a sort of 50 pip move with hardly any drawdown. As you can see there, hardly anything. If we look at this one over here, you could have potentially got some drawdown, but we're only looking at about 3 pips. So 3 pips drawdown is nothing. Even if you're using a ridiculously high lot size, 3 pips is going to be very manageable. A 3 pip drawdown, and this one here, you may have got a single pip, possibly, and possibly not. So we had that move there, and now where we're at now, obviously, as I say, we're looking for a potential buy. So at that point there, I was looking for price to come down, make its move upwards, and then come back down again, because I was looking at the stochastic on the 5 minute, and you can see it's done that. It's come back down into this zone. So all I've done again there is it is actually not wholly accurate. I can see, so I only drew it on fairly quickly. So I'm just going to show you how I change those settings quickly. Just go to the coordinates. So I'm looking for the low of this green candle here. So up here we've got the coordinates of the candle. So for the open, the high, the low, the close. So OHLC is open, high, low, and close of this candle here, and I'm looking for the low. So that is telling me that on that candle there, the low is 1.79717. So actually, I'm on 1.79717. So it looks to me like that is slightly lower, but okay, we've got it fairly accurately. So I'm looking for the high point here, which is 1.80062, and on here I've got 1.80057, so I just need to push that up a tad, a bit too far, and then that has created our golden zone here. So we've got an opportunity there with prices coming to that. We could have potentially snagged some pips there, but as you can see, the 5 minute has pushed up a bit, come down again, and potentially giving us another opportunity. Excuse me. But beyond that, we've also got the indicator. So, oh my word, crazy. How on earth can you tell anything that's going on there? So we've got these various moving averages in place. We've got these symbols giving us ninja up, ninja down, lower lows, high highs, lower highs, so on and so forth. Excuse me, I'm so sorry. Give me a second, I'll just grab a sip of coffee. So there we go, we've got that zone in place, but the indicator isn't going to give me accurate information on the ordinary candles. I need to put it onto high Kanashi candles, which are trend-based candles. In fact, I'll just turn the indicator off for a second. So you can now see that we've got the candles are presented slightly differently. If I just flick back to ordinary candles, you can see there's several green candles here and a red candle and then a big green candle. But on high Kanashi candles, we don't see a red candle there. It's just green, 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 green. So these are trend-based candles, and they will start halfway along the body of the previous candle. So with this movement here, I was just looking for, okay, we've had price pop into this zone here. and now I'm looking for a ninja down, and there we go, we've got a ninja down at that point there. So price comes all the way down to that area there. We're looking for a ninja up from this zone here. We won't be taking that one because obviously we wouldn't have drawn that zone yet until it's made its high. So at the moment I'm still looking for a ninja up from that area, because we've now got on the multi-time frame stochastic the 5, the 15. In fact, I'll just make that large for you. So the 5 is the blue and red, so it's the fast and slow of the 5-minute time frame. The green is the 15-minute, the white is the 30-minute, the orange is the hour, and the yellow at the top here, as you can see, running, well, I say running, it looks a bit jaggedy and a bit horrid. That is the 4-hour time frame. So it's a bit more clunky in its movements on this time frame because we're looking at the 4-hour movement on the 5-minute time frame. So the 5-minute, nice and smooth. Green, less smooth. The white, quite clunky. Orange, quite clunky, and yellow, quite clunky. So those are the different time frames that we're looking at in one go. So what I would be waiting for now is for the 5-minute, the 15-minute, and possibly even the 30-minute and the hour to get down into the extreme. Now, obviously, it's going to take less time for the 5-minute to reach the extreme because it's based on 5-minute candles, 5-minute time frames. So the hour is therefore obviously going to take longer to get down there because we're waiting on the next hour movement. Same with the 15-minute, that will not take as long, but we're waiting for that movement to happen. So that's all I'm doing really. That's how I'm trading, and that's how I'm going to be teaching people what I do in the workshop that's happening next week. So there's really not a lot to it. But it does take some time to learn and to get to grips with everything. But you may be looking at this going, well, okay, I understand you're saying that we could have got 30 pips there, could have got 50 pips there, we could have got how many pips elsewhere in these moves. But how does that relate to money? How much money could I earn from that? And that completely and utterly varies on every individual, on every person's trading account, what sort of account size they've got, what sort of lot size that they can use. So say for example, let me just stop sharing at the moment, so not looking at all that nonsense. So for example, if you were using a $100 trading account or £100 trading account or whatever currency you want to trade in, you wouldn't necessarily be using a high lot size, because if the trade goes against you, then obviously you're going to be losing a larger amount of money than actually gaining a larger amount of money. So you've got to keep things sensible and keep things in relation to your account size. So normally I would say on average, if you've got 100, base it on per 100 US dollar, British pound, whatever it is in your account, use a lot size of 0.01 per 100. So if you've got £100, you'd be using a lot size of 0.01. And many people go, well, okay, that doesn't work out to be very much. No, it doesn't, not initially. But over time, when you start building it up and start building your account up and compounding, those lot sizes will grow, and you'll start to see a bigger return on the same movement. So if you had 10 pips moving at a lot size of 0.01, that would give you, get the old calculator out, 0.01 times, I'll do it by 100, that would give you 1 whole British pound. So it's not a huge amount of money, if you're doing pounds, not a huge amount of money, but the next time you go to place trade, you then got £101 rather than 100, and then you probably still be using a lot size of 0.01, and that was just 10 pips. Obviously some of the moves there we're talking about 30 pips and 50 pips. So for 50 pips you'd be looking at £5. So again, doesn't sound like a lot of money, and it won't be to start off with, unless you're going to start off with a ridiculously, well, not even ridiculously large, but a larger trading account size. Then you're going to be starting sensible and learning what you're doing. And if you were actually going to be doing it properly, you'd be starting off with a demo account and not trading live straight away, because you're going to lose trades. you are going to lose trades. That's an absolute fact, because you won't have all the knowledge and understanding right from day one. So you're going to be losing trades. So it's best to lose pretend money rather than real money. Now, once you get to a point where you're becoming consistent with your trading and you're starting to see your demo account grow and grow and grow. I mean, you could get a demo account with £5,000 or dollars or whatever it is, just as an example. Then you wouldn't be using a lot size of 0.01. You'd be using a lot size in relation to your account size. So you could see, actually, when you're using those larger amounts, you could see the growth happen a lot quicker. Now, the other thing is, excuse me, I'm so sorry, that once you start using a larger amount, that's when the pressure kicks in, because when you start using higher lot sizes, you can start to panic a bit more when the trades go against you. But it's not about panicking, it's about having the confidence and knowledge in your trading and your chart markups. So for here, for example, whilst we've got this fantastic indicator that helps us make a decision to get into the trade, we're not trading solely based on this alert that's coming up. We are purely using it as an additional confirmation. So I see some charts where people have various additional indicators on their chart because they want to get as many confirmations as possible to make sure they're making the right decision before they get into the trade. And I completely understand that, because no one really wants to lose money, do they? But once you get into a trading style and your personal trading preference, and it all depends on the time that you have available to trade. Some people may only have the evenings to trade. Some people might only have the mornings. Some people are busy out at work all day and are not able to spend time at the charts. But when you come home in the evening, okay, this particular currency pair is a bit of a sideways mover come sort of 6 o'clock in the evening. It will, in fact, whereabouts are we here? So yeah, at that sort of time of day, as you can see, it sort of hit this area and then kind of gone sideways for a bit, and then it started to make its move. But you can still capture pips, and some people in their early days will only go for, okay, I mean, profit by 5 pips. I'm taking that. I'm closing that out, which is fine, because you will not go broke taking a profit. But the thing is getting to understand how the charts work, how the price moves happen, and what sort of things you're looking for. So you can have as many indicators on here as possible, but actually when you're trading with larger lot sizes, that's when you need to have the psychological side of being confident in your trade, in your markup, and that you've got things heading in the right direction for you. So at the moment, for example, where we're at now, as I said, I'm looking for the 5 minute to stochastic to get down to the extreme, looking for the 15, maybe the 30 minute as well, before I look for that to start pushing up, because we've got the 5, 15, 30 an hour quite low down. I would be expecting price to push up. However, with that being said, you can get elements of, like here, this patch here, it's gone right up here. We're looking for a potential sell, but actually price has pushed up and up and up and up, and the stochastics, the 5 minute and the 15 minute, have just snaked along the top there. So it's actually getting to the point where you're waiting for, and hence this zone, it's pushed up to that zone quite nicely, and then you're looking for a move to the downside, and you're just looking for the stochastic, looking for an indicator to give you an additional confirmation, and away you go. So you've had the cross of these moving averages happening here, but you've already had the ninja down alert there. You can then go for your target. Some people will go for this blue line here as their first target, and if it carries on going down, then that's a good sign. And that's it. That's all I do all day, every day, helping other people to trade and look for these opportunities. So that's what's coming up in the workshop. But it's not just me. There's going to be other people showing how they trade, And we're literally showing you how we trade, what tools we're using. I haven't shown you any of the other actual tools that we're using. I've just shown you the ordinary price chart with the Ninjacator, one of our fantastic in-house developed by my trading buddy Kevin. He also developed this multi-time frame stochastic for us as well. So these are not publicly available. They're only available to members of our trading community. And you can go and look at these price charts and start to recognize when certain moves start to happen. You can look for certain patterns. You can look for lots and lots and lots of different things. But actually, when you get a snapshot of this is how I trade, this is how Kevin trades, this is how Paul trades, this is how Brian trades, this is how Anne trades, this is how Helen trades, this is how Sarah trades, this is how Adrian trades, this is how Tom trades. You get to see different things, and you can associate the personality, the trading style, and match it to your time availability, your preference on being in trades short term or long term, and so on and so forth. So I've waffled on for quite some time there. I just thought I would give you a quick snapshot, and then I'm going to leave you with that. I hope you have a fab rest of your day. And if you haven't messaged or put a comment or what, I don't know what else, just express some sort of interest. If you're looking into trading Forex, just express some kind of interest. Let me know that you'd like to take a look at the workshop. It's free and open to everyone. There'll be some recorded elements, there'll be some live elements, but just let me know and we'll get you hooked up and ready for those. So it's going to start on Monday, the 20th of May. I believe we've got sort of 2 sessions a day running. So if you can't catch them live when they're happening, doesn't matter. You'll be able to catch a recording of it. And we're hoping the sessions are going to be in fairly decent bite-sized chunks so that you don't get overwhelmed, because I know it's easy to get overwhelmed when you're looking at all these weird things on the charts and squiggly lines and look at me with my hands, squiggly lines and stuff that it just takes a while for that information to sink in. So there we go. Get in touch somehow if you're interested. Right, I'm going to love you and leave you. Have a great day. Catch you all later.